Well, what about Bitcoin? Well, Russia is one of the largest miners of Bitcoin in the world, right? I mean, so they're accumulating it in a way. China supposedly shut down Bitcoin, but they're mining it as well. Are they buying it? It's unclear. We don't know. But what we do know is that the United States is talking about buying Bitcoin as a reserve asset. And just that conversation starts this whole game, the whole game theory. So once one nation, once a G20 starts buying Bitcoin and it's public, well, then that game theory is in play, and then they all have to. There's just no way around it.
Many people have interpreted Bitcoin for years as just another speculative asset that moves in lockstep with tech stocks and risk on mood. James Lavish, however, offers a more complex and nuanced perspective. Lavish asserts that Bitcoin is responding to long-term monetary changes as well as global liquidity movements, not just market fluctuations. He highlights that the future course of Bitcoin will be significantly influenced by central bank policy, the sustainability of the debt, and the unavoidable requirement for more easing. Additionally, he thinks that Bitcoin will separate and become a distinct asset class over the course of the next 10 years, serving as a hedge, a store of value, and a lifeboat amongst the instability of fiat money. Remember to click the subscribe button and enable notifications to ensure that you never miss our most recent analysis. Thank you, and enjoy the video.
We all know that Bitcoin has been kind of the tip of the wrist spear for years now, and what I mean by that is if you watch the Bitcoin, you'll kind of know what the NASDAQ is going to do alongside it. And so, but one of the important things here, Anthony, is are we talking about Bitcoin in the next year or two, or are we talking about long term? Because it does follow the money supply. So the money supply expands, Bitcoin follows it. It trails it by about 8 to 12 weeks. So it catches up to it, and you can see how that correlation is. However, I think in the next 5 to 10 years, Bitcoin's going to have a decorrelation. It's going to decouple from the risk assets. And what I mean by that is that Bitcoin as an asset class is going to grow, and it's going to solidify as its own asset class, just like gold, right? And you're seeing it kind of happen right now. And so if you look at the entire investable universe, there's $900 trillion of investable assets out there. And Bitcoin's only $2 trillion of that, well, less today, but it's only $2 trillion of that. It's a fraction of a percent of that. And so the longer answer to your question is, as Bitcoin grows and starts to take market share, not just from gold as a store of value, but from real estate, from bonds, which have $630 trillion in those two asset classes. As it starts to take market share from them, then it decouples, and it follows something that is not exactly correlated to the money supply anymore. Now it's gone on that S growth curve, and it gets through that hump and starts that exponential growth again. We've all seen the BRICS nations announce that they want to get away from the U.S. Treasury, and that they're buying gold in the background. We've seen them accumulating gold, and the BRICS countries, Brazil, Russia, India, China, and South Africa. The issue here is that Biden's administration made a catastrophic error in shutting off the SWIFT access for Russia, and then seizing their treasuries. I mean, they basically just signaled to the world that if you're not a strong ally of the U.S., we may just take your assets, and the ones that we need you to buy. Probably the stupidest decision I've seen made at the administration, there were plenty, but that was unbelievable. So you're seeing the BRICS nations, they're not saying that they want to have their own currency. They just want to get away from owning the U.S. Treasury. So that goes to gold. Of course they're buying gold. They can store gold and be able to access those dollars that they still need. They still need for cross-border trade. They still need to settle things with the U.S. dollars. So they need the dollar, but they're trying to get away from needing the treasury. So that goes to, well, what about Bitcoin? Well, Russia is one of the largest miners of Bitcoin in the world, right? I mean, so they're accumulating it in a way. China supposedly shut down Bitcoin, but they're mining it as well. Are they buying it? It's unclear. We don't know. But what we do know is that the United States is talking about buying Bitcoin as a reserve asset. And just that conversation starts this whole game, the whole game theory. So once one nation, once a G20 starts buying Bitcoin and it's public, well, then that game theory is in play, and then they all have to. There's just no way around it. Institutions and institutional investors had a really hard time buying Bitcoin before the ETFs. It's just the operational challenges that Sam kind of alluded to. Even if they got the entire investment committee comfort with owning Bitcoin, they still had so many operational issues, meaning, who's going to custody it? Are you going to have keys? Are we going to have multi-signature solution? Who's going to hold the keys? Is there going to be a hierarchy to this? Like, what if we lose the keys? Then, my God, that's a risk for my career. It's a fiduciary risk. And where do you settle it? If you're going to have a prime broker, what prime broker is going to hold Bitcoin for you? Is there one that available? And then, where do you mark it? All these things, which in one fell swoop, the ETFs came in and they solved everything, because now you could just come in and buy the ETF just like you can buy the spiders, or you can buy the Qs, and you just put it in your portfolio and it settles at your prime broker. They give you margin on it, and it's super easy, and you know exactly where it's being held, and you don't have to worry about all that operational risk. So it makes sense for some countries to start there. But like Sam said, I agree that, look, once they get comfort with it, they're going to want to own the real thing. And they're going to want to take away that counterparty risk, which is, does Coinbase really have all of the ETF underlying value of Bitcoin for the ETF that they say they do? Unless you have some sort of audit, you just don't know. And so they're going to want to own their own at some point if they really want to get away from the United States. Now, Abu Dhabi doesn't have that issue with us like Russia does or China does. But, I think some of the other countries that are more friendly with the United States will start there, and that makes perfect sense.
It appears that the U.S. budget cannot be balanced until nominal GDP, which is typically caused by greater inflation, rises significantly. The 10-year Treasury yield, a crucial indicator of borrowing costs globally, is one of the interest rates that Trump has publicly stated he wants to cut. Lower interest rates would encourage greater investment and expenditure by making borrowing money more affordable. That could temporarily strengthen the economy, but it would also increase inflation, devalue the U.S. dollar, and encourage more investors to seek out safer ways to safeguard their capital. Bitcoin is a popular option. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
If we do balance a budget, it's not from real growth. It's from nominal growth. And so what that means is that this administration figures out a way to grow the GDP in terms of U.S. dollar growth in devaluation, meaning that the dollar will be worth less and less because of inflation. So they will drive inflation. You've already heard Trump talking about interest rates. He wants a 10-year down. He wants a 10-year down. The yield on the 10-year.
Explain this further, because I don't think people they hear him saying it, but I don't think they quite understand what he's talking about there, and what the impact of actually getting that 10-year yield down is.
So the 10-year Treasury is the benchmark Treasury of the world. Like, this is the global reserve asset of the world. And he wants that interest rate down because he knows that is what causes constriction in lending. So if you're going to borrow, and we're all, the whole nation, the whole world, but the whole nation is based on debt. And so if the interest rates are high, the 10-year is kind of the benchmark. So what does that mean? That means that auto loans, home loans, mortgages, they're all keyed off of that interest rate. And then all business loans are keyed off of that interest rate. So depending on how risky your business is, it's going to be keyed off of that 10-year Treasury and how much more you have to pay in interest because of the risk of your business. So that means that if the yield on that, meaning if the interest rate on that 10-year is higher, then it's going to be restrictive in the economy. Okay, so the point though is that what Trump wants to do is he wants to make it easy to access capital. And if you have easy access to capital, you have more debt, even in just in the private sector, forget about the government, then you're going to have an expansion of the money supply, and you could balance a budget because you've grown that top line so much, which is where you get your taxes from. And instead of collecting, say, $6 trillion of taxes or $5 trillion of taxes, you'll collect $7. And that is possible, but it'll be driven by nominal growth in my mind.
The United States debt crisis is a serious issue, as James Lavish points out. We are caught in a vicious circle of borrowing, and in order to pay off our existing debt as it matures, we must take on even more debt. Because of this, the government's financial structure is unsustainable, and it cannot make enough money to pay its debts. The numbers are self-evident. The U.S. deficit was already $2 trillion last year, but in the first quarter of 2025, it has increased by 40% to $711 billion in just 3 months. This indicates deteriorating financial health. Nevertheless, Lavish makes it apparent that using conventional methods, such as actual economic growth, to balance the budget is unlikely. He believes that nominal growth, which is driven by inflation. This implies that policies that inflate the currency and gradually devalue it will probably be promoted by the administration. They are able to artificially increase GDP figures and give the impression of growth by devaluing the dollar. Trump's efforts to cut interest rates more especially, the yield on the 10-year Treasury come into play here. The benchmark for international borrowing rates, which influences everything from corporate loans to house mortgages, is the 10-year Treasury. Lower interest rates make borrowing more affordable, which promotes greater governmental and private sector debt. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.